look, I don't want to rip money to get your attention. I really don't. But if I have to, then I guess I'll just have to I can't do it this time. But what I could do is take this money and throw it up to hopefully get your attention. Because in this video, we're going to be talking about the only strategy to become a Bitcoin millionaire in 2021. This is a hybrid new strategy that has just came out. I made the last video. It's doing ridiculously well. People seem to respond in a positive way to my last one. So we're going to dive back into the subject now that we got DeFi, now that we have all these liquidity providing opportunities and passive income. And now that cryptocurrency could potentially be in the bull run, we'll be revisiting the subject. This is the only strategy to become a Bitcoin millionaire in 2021. Part two, redefined and deeper than part one. But yeah, keep watching. What's going on, everybody? Alex back with another cryptocurrency video. And now I got to pick up money off the ground because I have no life. But other than that, my life is cryptocurrency. So we're going to be talking about the only strategy to become a Bitcoin millionaire in 2021. And this is going to be part two. Part one was good, but I realized I didn't explain it very well, as well as so much new stuff has came out. And the strategy is going to change for 2021. If you are interested in more detailed strategies, kind of blueprints and checklists to get you, just straight to results, guys, the first, I will be stopping completely lifetime access to the fundamentalsecrets.com. I'm going to be telling you guys this over and over again until I beat it in your brain, because once it's done, it's done. Lifetime access is unheard of anywhere I have ever seen before. But for being a part of my community, the organic and showing support, I'm doing that for you guys. And then after that, it'll be a yearly subscription like normal. So go ahead and head over there and talk to one of my coaches, et cetera, et cetera. But today we're going to be diving into the strategy that we use actually in the course. It's going to be like a bird's eye view. We'll go into all the specific details. So let me just go here. So this is going to be a bird's eye view of exactly what to expect with the strategy for 2021. Anyone can do it, right? It's going to be from start to finish. I'm going to leave out no detail when it comes to the bird's eye view of this OG hybrid strategy, right? So I don't want to give you false hope or sugarcoat any detail about the subject. So it might not be perfect for you, but this strategy, again, is what's set up perfect for cryptocurrency. This is specifically made in the cryptocurrency realm. So just understand that, sometimes you got to change yourself to the strategy. So just understand, I'm not going to sugarcoat anything. I'm not going to make you guys feel good. The goal here of this channel, and if you appreciate it, go ahead and hit the like button, hit that subscribe button with the push notification bell. The goal of this channel is to help people actually get results. That's the only goal for this channel, just to actually force people to results. And some people just don't want to hear it all the time. But we're going to dive into it. I'm rambling. Results I've done for myself and others. It's repeatable and predictable. So once you understand the strategy, you can just do it over and over again. It's kind of like having a win button. It's not always wins, but you're going to have in the weekly and the monthly, you'll be able to turn profit fairly easy. It's cycle trading, guys. So let's go over here and what to expect. This is a 1 in 6 year opportunity. Don't dilute your profits and have shiny object syndrome. That's step one. Most people do that. If you have more than 10, 15 coins, you most likely have shiny object syndrome. You just think that anything can make money. The goal is to capitalize on things that are actually making money, right? Don't get greedy and not take profit. So, even I'm guilty of this, where there's times where people, at the top of the bull run, you want to be a hodler, right? No. This strategy is going to be requiring you guys to take profits at the right points, okay? This strategy is basic, but very, very easy to execute. That's the beauty of it, is that it's not anything crazy that, the average person can easily pull off. What we're talking about in this video. It doesn't require like a super fast computer. You can do it on any laptop. I'm sure you can do it on like a $100 laptop. You don't need like math skills or internet skills at all. Fairly basic. You'll be able to pull it off. Now, this is the Internet 3.0. But just for the basic amount, you don't need it if you don't want to. It's always encouraged to learn more, and learning will always take you the furthest, but you don't need it to start at all. Results can make life-changing amounts of money. Okay, the reason why I want to say that is because people are typically used to making 10, 20%, just getting like this guaranteed check at the job, or trading and traditional finance. But they don't ever see large lump sum of cash. I mean, the traditional market is 7 to 10%, right? So they're not seeing like these crazy amounts. You could easily turn anywhere from $1,000, $3,000 into close to six figures, like $50,000. It's not far off in crypto. This is an asymmetrical return, which allows these type of results, right? So just understand that This is a 1 in 6 year opportunity, and it has life-changing amounts of money results for a lot of people. Trust me, people have been making money in cryptocurrency for a long time. So new age hybrid strategy includes fundamental analysis, technical analysis, yield farming strategies, dollar cost averaging, of course, dynamic dollar cost averaging, and cycle trading. So we're going to be going all the details. You can't just have one, right? You can't just do technical analysis all day. You have to have a combination of all of them to make the proper decision. And that's obvious. Okay, so you don't need higher than average savings for this. Okay, so you're not going to need, and this is just, I just want to briefly go through it because it's beautiful that we have an opportunity now that the average person can get life-changing results, almost like not no effort, but far less effort than making a whole business. That's a fact, right? So that the average balance for U.S. households, 3,400, and or 10,545. So it says the median checking account is 3,400. So yes, with $3,400, you can turn it into 50 grand, 100 grand. And then I'm sure that will change a lot of people's life and, actually help a lot of people, right? So first thing I want to explain, and it's going to be hard for a lot of people, and I have to explain, like I said, I'm just going to get down to the nitty and gritty. You cannot pull this off. You could pull it off. I pulled it off. But it would be harder to pull it off if you don't have cash flow reserves. So if you don't have guaranteed income coming in, whether it's a job or a business or some passive income, you can't just quit your job with, $3 grand and just make, $50,000. Because remember, you're gonna have to pay your bills through the whole time. So you don't want to touch your cryptocurrency in a lot of cases. And if you're too busy paying bills and you don't have any cash flow, or you don't have any cash flow to dollar cost average down, it's gonna be a lot harder. Even though I pulled it off, doesn't mean that everybody can do that. So I just want to be very careful in explaining this stuff because there's a lot of people on the internet that will give you the wrong impression. And I'm just trying to be honest and open and transparent like this channel. Again, if you appreciate that, hit that like button. Let's get these videos out so we can get some transparency in cryptocurrency. There's a lot of scams out there. And there's no need to scam when there's money everywhere. There's opportunity everywhere. Solve a problem, people. Solve a problem. Stop trying to rob people. So back to cash flow. I will say that it will be a little bit more difficult if you don't. But if you don't, it's fine. Just go find something. Go get a job and do both at the same time. There's nothing wrong with that at all. I don't want to beat that negative stuff into people's heads. Now, the reason why this market is so lucrative is because it's basically asymmetrical. And I'm going to explain that. So this is the S&P 500. This is the stock market index that measures the stock performance of the top 500 companies listed on a stock exchange in the United States. Okay, it's one of the most commonly followed indicators. So the market cap of this is $23 trillion. Now, the reason I'm explaining this to you, because I want you to look at this chart, it's going to make a lot of sense. So if I click over here, you can see, and when we compare it to crypto, one thing you can see is that this is just a kind of a straight line up. It's kind of fake. Cryptocurrency has gone up and it's gone down, and we're on the verge of going up again. So when I explain this, the reason why I'm telling you is because the market in cryptocurrency is so much more lucrative. It's just so much more lucrative. I don't care who says otherwise. And I'm going to prove it to you. So this is the world's broad money. The world's broad money is about $80 trillion. And you can go look this up for yourself on the FBI website. I believe it's about 83 or 86 trillion or something like that. But let's just make it easier and say $80 trillion. So if you compare the S&P 500 market cap to the actual world's broad money, the S&P 500 is about 30% of the world's broad money. If world's broad money basically means any liquid cash that you can take out of a bank account or equity in a house, anything that you can move that's broad and it's liquid, right? Nothing that's locked up. So the S&P 500 is 30% of the world's broad money. And then in cryptocurrency, it's 0.449% of the world's broad money is in the crypto market. So that means there's less than 1% of, not even a half of a percent of the world's broad money is in cryptocurrency. This is what you call an asymmetrical opportunity. Let me explain further. So as you can see this line right here, there's low upside potential, but big downside potential. And we can even look at the chart and you can see it for yourself. So if you come over here to this chart, you can see that there's just much more potential for it to go down and up, right? We're already kind of at the top. Now look at cryptocurrency. We still have this whole gap here and then some, because it has an asymmetrical possibility of becoming, $200,000 per coin, $150,000 per coin. So it's just much more opportunity, which looks like something like this. It can go down. You can lose your $100 for putting $100 in crypto, but it has a chance to turn into 2,000. This is where you get these crazy life-changing results that I keep trying to tell you about with cryptocurrency. It's because it's an asymmetric market. If you ever watch Wolf of Wall Street, similar stuff, right? Penny stocks. So this is the exact strategy. You develop your own fundamental analysis blueprint that you want to put together. You basically use some type of fundamental analysis to find undervalued altcoins that nobody's really talking about, that the market has not already caught up to. So if you're following your favorite YouTuber or something like that on coins, you are literally one step behind. I would say you're a week's behind if you're following YouTubers because they schedule their videos. Now, when the actual market catches up to you, and the fact that the actual coin you picked is actually valuable and the market's like, hey, the coin's actually valuable, they buy your bags for you and you can sell it at a higher price. It's very simple stuff, right? Very basic, like I was telling you guys. But a lot of people might be wondering, I'm going to lose money, right? Of course, that's the obvious thing. Most people will lose money. But as you can see here, it's called risk management. If you have good risk management in an asymmetrical environment, you're setting yourself up for success. So as you can see, you just put small amounts. And of these small amounts in different coins, you hedge your bet. And the two that win will give you asymmetrical results. So you only lose 100, you only lose 100, you only lose 100, you lose $400. And then these two, you can make, $5,000, $10,000 off of those two, which will make up for the losses, which brings me back to that line. High upside potential, low downside potential. Does that make sense to you guys? For the market of the S&P 500, just double, it would have to become, $6 trillion? $6 trillion? Do you know how hard it is for that market to accumulate that much money? You know how easy it is for cryptocurrency? It's not even at 1 trillion. The market cap of cryptocurrency is not even at 1 trillion. So just understand that. So this is the literal formula to a 6-figure portfolio: an asymmetrical environment plus good risk management and controlling of your emotions with good fundamental analysis. This is how you put yourself in a position to win in investing. Okay, guys? So let's talk about the foundation of risk management to go into more detail. So you have to first start off with your macro portfolio. You have to understand, you have to create a portfolio first and have good risk management. So if you have no cryptocurrency, this is what I recommend for people to start off. This changes on a daily, weekly basis. Again, if you want updates on that, head over to my website, get signed up. But if you want to make your own strategy, I'll explain to you how I do it. Right? So the macro portfolio goes like this. I have 50% USD, I have Bitcoin, 20%, Ethereum 15%, and then my other 15% is in altcoins. Now, the reason I do that is because Bitcoin and ETH will typically do very well. The goal of Bitcoin and ETH is anywhere to 10 to 20x for both of them in about 1.5 to 2 years. So it should always be to increase your Bitcoin and ETH. These assets are appreciating at higher than stock prices like Apple, Amazon. You don't want to bet on a downturn of that. Right? So you want to have your USD on the side, and then we'll talk about the altcoins later, right? And you can use your USD to dynamic dollar cost average into Bitcoin and Ethereum. So let me explain further. So this is exactly, so we have 50% USD and 20% Bitcoin. I only onboard into fiat with Bitcoin. So it's never a time where I'm like, hey, let me take my bank account and buy $500 worth of, Kyber network. I don't really do that. My goal is to take my Bitcoin and put it into altcoins. But when I'm onboarding actual fiat currency, I usually put it into Bitcoin or Ethereum sometimes Ethereum, but most of the time I'm buying Bitcoin and then I'm taking my Bitcoin and transmitting it into others, right? And the reason for that is because your goal should always be to increase your Bitcoin. Bitcoin is increasing at a ridiculous percentage, guys. The gains from Bitcoin alone will outcompete hedge funds. So if you just hold Bitcoin, you're going to do better than 99% of people, right? Now, the goal should be to increase the Bitcoin, right? So that you can do that. And we do that through cash arbitrage cycle trading strategies, which I've detailed in my videos, of course, and we're going to be detailing here today. So first thing I want to show you guys is something called dollar cost average. And this is how I onboard into cryptocurrency from fiat, right? Fiat basically means government-backed currencies. So it's very simple. And I put this here because it's a good way to put it. So let's say hypothetically, you're rolling dice and there's a 50-50 chance for you to win, okay? 50-50 chance. You roll the first dice and you put $1 up, which is right here, and you double your money. You get an extra $1 back. So now you have $2. Remember that. So you get plus $1. Now you have $2. You start off with $1, you have plus $1. Now let's say hypothetically, you go down the line and you gamble again, right? Let's say you lose $1. This is how you dollar cost average, and this is why it's so important. Let's say you lose $1, right? Now you're down $1, right? You double up. You put $2 in. You lose that. Now you're down $3, okay? You double up again. You put 4 this time, right? You win. You were down 3. You added 4. So that means that you literally got plus 1. And in these 2 steps, now you're up plus 2. This is how good risk management works. Same thing. If you keep doubling, and it's the same thing with Bitcoin. When Bitcoin drops in value, you lose, you double it. Lose, double it. Lose, double it. And then when it goes up, you make all the money back and then some. Like here, you make an extra to your pot. This is how you do it. So at the end of the day, if you just keep betting, if you're willing to go down, that's the one thing that people lose, right? This is why people lose, is because they're not willing to go down. If you're willing to go down and you just stick to your strategy, right? This is where emotional control comes into play. You stick to your strategy, you go down with the market, you can easily take this USD position that we're talking about. This is why it's important to have USD so that you could go down. Most people lose all their money before, Bitcoin's going to $4,000 and they have no cash to buy it, right? You want to have cash on the sidelines always so that you can dollar cost average on the way down, right? This is the reason why. This is the only way dollar cost average is going to work is if you have a good macro portfolio. So if you use this with onboarding fiat to digital currency, it protects from volatility, protects from emotional investing, and you have a high chance to profit if you do it correctly. And everybody should understand that through the dollar cost average strategy that we just explained. So we detailed exactly how to onboard into crypto. Now let's talk about the next one, the micro portfolio. Remember, we saw 15% of our money is allocated to altcoins, okay? It's the 15% split. Now this is where we're gonna try to make money to increase our Bitcoin position, okay? Now, it has fundamental analysis principles, but these are like the main categories you could look into and research for yourself. Look into the product. When you're looking for an actual cryptocurrency, fundamental analysis basically means that you can see variables that are not quantifiable. So what that basically means is like a CEO that's really good and you can't put a number on it, but you just know he's better than that CEO. Or, a marketing team that's really good and you just know, you can't put a number on it, but you know their track record is good and you know they're gonna take the business to new heights. That's what fundamental analysis is, right? It's a non-quantifiable way of looking at them, but you could quantify, you could rate it 1 to 10 like I do. So we have like 104 to 150 variables on how to execute proper fundamental analysis. I believe I have the best proprietary information on the internet for fundamental analysis. And again, head with one of my coaches will get you in there. The first, I'm gonna say that 1,000 times until you guys jump over there. To get lifetime access to the fundamental secrets, that's basically what we're made for. But I break it up into these categories right here. I don't wanna just give it away on the internet, but these categories, if you look within those, you will be able to find your answer. Marketing, product, leadership, industry, and ecosystem. Do not compare coins that are not in the same ecosystem. It would be irrelevant. So let's go to the next slide. And you do this, right? So you execute your fundamental analysis research principles and you put it into you put a small amount into these coins. So this 15% is split up into like 10 other coins, right? This 15% of the actual pie is split up and we gamble by using fundamental analysis. And then the ones that win, like we talked about before, will make up for all the losses. And at that point, you cash into Bitcoin to realize the profit of Bitcoin because Bitcoin will increase in value almost more than any other asset over a long period of time. In the short term, all coins would do better, and we use that percentage gain to buy more Bitcoin. Hopefully that makes sense to you guys. Now, adding on to the strategy, I told you guys it was a hybrid new age strategy. The 50% USD that we have, that's just sitting in there, I split it up into the best stable coins on the market. I split up into physical cash, and then I have some in the bank to diversify, right? And the reason why I do that is just in case there's like a run on the bank or something, and you can't pull your cash out, I got cash in hand. If somebody robs my cash, I got money in the bank. If all of traditional finance goes down, I got stable coins. So I diversify them. And now the stable coins is where the strategy is at in cryptocurrency. I'm gonna show you what I'm talking about. Yield farming in different protocols can earn you anywhere from 30 to 50% APY. Now, you can use something like Yearn Finance, you can use Aave, and they have all these different yield farming protocols, but you can actually use USD stable coins. So these are basically coins that are stable and you gain this APY over time. So this is for me is like savings. So my USD is like savings and I'm still getting 30% APY, right? Which is really, really good and unmatched on anything on earth. So just understand that the opportunity in cryptocurrency is very fruitful, trust me. So yield farming, just be careful with it. If you're looking at the protocols, make sure it's audited code by multiple organizations. Make sure there's some smart people looking at it and you don't get scammed. Never risk impermanent loss. You can provide liquidity to these protocols by using like regular coins instead of USD coins. The reason why I use stable coins on purpose is because there's no risk for impermanent loss. There is a risk, but it's very small compared to like Ethereum. So when you're providing liquidity to these protocols, and liquidity means you're just giving them the money so they can use it, right? So when you're giving them the money so they can use it, and they have to give it back to you. But if there's a price difference, so if Ethereum drops in value for your pair, you can technically lose some Ethereum. With USD coins and stable coins, there's no risk of impermanent loss. The only risk they have is if the USD coin loses value, but the whole point of the USD coin is to stay $1. So there's very little risk of impermanent loss, right? Only use well-known projects and projects that people are talking about. Don't get caught in a scam. Be careful of anonymous founders. So if there's an anonymous founder that doesn't want to show his face, there's likely a chance that he's gonna fake a hack, right? While they're trying to upgrade the protocol or something, there's a hack that happens. And then you don't know where the money goes. Just make sure, I know Bitcoin's anonymous, but just in the future, there's no reason for them not to be anonymous, right, guys? So the literal formula, again, I'm gonna break it down. Leave a like on this video if you like the quality of this video, seriously, guys. Literal formula to a six-figure portfolio, to prove it to you, again, is an asymmetrical environment, good risk management, and fundamental analysis. Okay, that's all you really need. That's all the variables you need to have a profitable, cryptocurrency success. So there you go, guys. This is the strategy that Millionaire has been using for the longest time in cryptocurrency. I just added the yield farming and obviously explained it in greater depth. So a lot of people were asking for that. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. Catch you on the next one. Peace.